Hello, 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 hello. It's Friday. Hold on one second. Let me invite my special guest here. Hello, I am so excited today. I have been working crazy and it feels like everybody has wanted to talk because I was really excited about this live. So today, if you have not seen the announcement, we are talking all about building wealth and the stock market. And I am, hey, Nash.
Hey,
So I told everybody I put on the serious glasses today.
I see that.
Not my cute glasses, because these I'm serious today. Because everybody has been calling, and I mean like literally everybody, people that I didn't even know could spell stock market, have been calling me and saying, hey, Dr. Shante, where do we, all of a sudden, everybody wants to be in this market. And I thought that was a perfect cap off to my Wealth in January series because, you know, there are lots of ways to make money. Mm-hmm. There are lots and lots and lots of ways to build wealth. And one of them is investing. And you can invest in a lot of different things, of course. The stock market is one I get asked about, and I play in the market, but I am by no means an expert. And I was just telling Nadia, I told her that her financial tea is always piping hot and always right on time. Mm-hmm. And it's something that would absolutely get us all to the wealthy standpoint. But tell us, we're just going to start at the beginning.
Okay.
So I'm going to just jump off and say, how are you feeling about GameStop, AMC, all of those stocks that popped up and then, you know, they doing this right now? How are you just feeling about the whole situation? And start anywhere you want.
I am feeling, like you said, I'm happy to see everybody want to start investing. I'm happy. I didn't want it to be under these circumstances, but I'm happy because what I'm seeing is that a lot of people are like looking at, well, what's the best app to use? What's the best brokerage to use? What are you feeling about this and that? And this, I think since Jumanji, last year, so I call 2020, it was like a big volatile market, period. No matter if it was the stimulus or anything like that. So to carry it over to this big squeeze of 2021, I'm happy to see, that's my disclaimer. I'm happy to see so many people investing. Mm-hmm. I am not so happy to see so many people buying into hype and not doing homework before they snatch these stocks. That is what I'm not happy about. They're investing in a pump and dump situation real quick. The pump and dump is pretty much if you seeing it go up, you pumping it up, buying. Then the thing is, with this type of investing, is more mental than it is actual movement. So when you start seeing the stock, like I think, shoot, GameStop went down to 196 overnight, then it popped back up. So are you mentally capable of handling drops like that? And this is what this lesson is given for a lot of people. I'm happy to see them investing. I'm GameStop and AMC. If you've been following anything, those two companies are strapped for cash. They're pretty much knocking at bankruptcy store. I'm not feeling them right now because I am a long-term investor. I do play around with, pump and dump, and then I know when to pull out my money. A lot of these new investors do not know that. And a lot of these new investors also are thinking they're doing something that you're trading. You're not investing.
Yes.
So I'm not comfortable with AMC as well as with GameStop, but I am comfortable to see more people are starting to learn about it and to help decrease the wealth gap.
So you just said something that I don't think people know the difference. Trading versus investing. Mm-hmm. What's the difference? So I am also a long-term investor. And now I have some investments that are shorter term, but I'm not in for a few minutes and pop it back out. You know, I am investing because it's something that's a long-term strategy that fits in with my life goals. Tell us the difference between investing and trading, because I love that. That's something I have not heard people throw out there yet.
No, and that's usually what everybody looks to me for, because it's a lot of stuff people are talking about. I talk about different. Trading to me is kind of like, I'm from the South. So they used to do those ticket pulls for certain things like that.
Yes.
Trading is more gambling.
Yeah.
than anything. Investing is more, it's a lesser risk, but it's a form of gambling, but it's more secure. And that's for long term.
Yeah.
So if you're trading, you're trying to get that, get that money up or flip that money. It's a way of flipping and gambling and, pulling out more than anything.
Mm-hmm. Mm-hmm. So I know some day traders, and their job is to sit on the computer and trade all day,
right.
and they don't get up, they don't go to bed. They are literally watching, trying to get in.
I used to work with some of them. I know.
They are intense people, right? Like, they are intense. Most people do not have the time, one, to be a day trader. They also don't have the cash to lose to be a day trader. We always hear the ups, but we never hear the, ooh, I lost all my money.
I think it was one person I was following yesterday. They lost about $2 million when it dropped. I can't. I'm not.
I am not there in my law. I don't like losing $5. So first and foremost, difference between trading and investing. Now, I'm gonna get on my soapbox for 2 minutes. Get on it. One.
Go ahead.
I am a person. I am registered as an independent, but I consider myself probably more libertarian in thought. Meaning, do what you want to do with yourself, your money. You want to take all your money out in pennies, jump in and be Scrooge McDuck. I don't care. Don't affect me. It's fine. I don't think there should be as many rules and limitations on retail consumers or traders or investors, all of the people who essentially aren't mutual funds and hedge funds. So I'm going to say this. Yeah. I think what Robin Hood and some of these other trading platforms have done, Robin is now Robin the Hood. They're not Robin Hood no more. And so the fact of the matter is, and for those of y'all that don't know, what they actually did was they limited how much you could buy, but you could still sell. And the big guys, the reason this, started, creating buzz is because the big guys were betting on a drop. So when you sell stock, what happens to the price? It goes down. So those institutional investors could still do whatever the heck they wanted. The retail investors or mom and pops or the people sitting at their computer trying to get a few extra coins got halted. And that uneven playing field is not free market capitalism. That is not a free market. If all I can do is really sell, you are creating an uneven playing field. You are creating a situation where it's protecting you from volatility. That is not your job. I got the email. I'm on some of these trading platforms, and I got the email saying we're protecting you from volatility in the market.
You want to protect me before you want to protect me before when no.
Well, to be clear, triggers exist, right? So if we see the stock market drop precipitously really quickly, trading will halt, but it halts for everybody.
Everybody, not just a specific group.
So what are your thoughts on that? Are you on the libertarian ledge like I am? Like, I'm ready to go all in on this one.
Yes, I am. If I use trap songs in my stories, there's nothing conservative about me. While I am Robin Hood, I think that was one of the companies that I first, or one of the brokerages that I first started talking about, them and Stockpile. And just been seeing from the hiccups they've had with trading and all that stuff, I have slowly decreased my usage as well as my recommendation when it comes to them. And just seeing how they've been handling themselves during this time has really made me put a nasty taste in my mouth, because now people are, I want to buy, that dog coin. And a lot
I know
of people are going, and then people are going to that same brokerage to buy it that you were just talking junk about the other day. Don't do that. But the thing is I called it, what did I call it? Market manipulation. Because now that the investing and trading are not just for the affluent, it's for the affordable. The whole pendulum has changed. And I honestly, truly think whenever this is over, the SEC and FINRA is going to make some totally new regulations when it comes to this. And I am intrigued to see, but Robin Hood is in some deep shit right now because of how they operate.
I agree. So for those that don't know and who are not currently subscribing to the Financial Tea, somebody did tell us about the IPO of Robin Hood and who they may or may not be more aligned with.
Oh, I honestly don't think they're pulling an IPO right now. I will.
Oh, they can't now.
Oh no, because it was a meme I saw that I was gonna make about when you it was like a tombstone. They ain't doing it now.
They just raised $1 billion. They raised $1 billion after their halt in trading move.
And I bet you where that money came from too. Hedge fund people.
The big guys are in this one now, of course, because I'm sorry, that was a gift. And my real concern is the SEC is going to come in and not investigate why, short selling is one of the things, or betting on the down is one of the things that, precipitated the financial crisis, 12 years ago.
Yeah.
And so, are we really allowing people to start acting recklessly in this way again? I don't know, maybe, but they're not going to investigate that. I don't think they are. I don't think they're going to look at any of this.
Not as deep as we will want them to. They'll probably like high level, say we investigate it, put it in the media, let the stuff go quiet, then keep business as usual, pretty much.
Exactly. I think where the hammer's going to come down is on the Reddit chat room platforms where people are chatting and giving advice or saying, hey, I saw X, Y, and Z, and they're going to start labeling that as financial advice. And they're going to crack down on them, and they think, oh, now we've controlled the information use. I think that's where it's going to fall. Not on Robin Hood. I think they're going to give them some admonishment. They're going to pay a fine. They can use part of that $1 billion to pay it. The risk going to get tapped. And then they're going to move on. And it's the people who, and I will say candidly, I do have a few friends that put in, a few thousand and came up $30,000, $40,000, $50,000, but they got in and got out. I wasn't one of those people.
That is who was benefiting from this time, because they, like I said in a video a couple days ago, knowing when to let go is the key. Because when they locked down GameStop and all that, people couldn't get their money, and then when they saw it declining, they couldn't pull out.
Yeah. So that's the controversy. If y'all didn't know, I've talked about it. You talked about it. Now that we know the difference between trading and investing, let's dig in. I think we lost Nadia for a second there.
I'm back.
You back.
I was trying to lower this, but I'm just gonna have to be short.
Okay. Yeah, for once I'm tall. You can see my
I'm not tall.
Now I got the crazy hair today. I'm holding on to some curls that need to be let go of. But
they look good.
But let's talk about wealth building and how it relates to the stock market. Let's just start with the basics. First, just answer the easy question, I guess. Can we use the stock market or a stock portfolio to build wealth?
Yes, you can. A lot of the times people see, oh, we're just buying stock before, like you called out the long term as well as the short term. You can build wealth by capital gains as well as dividends. And a lot of people lean dividends, but there are a lot of people talking about capital gains. I saw this one post before Apple did their split, and this guy had a couple thousand within Apple, and he pulled out. But he said if he would have left the whole, not even the whole thing, he pulled out his whole holdings within Apple, not leaving something. He said if he would have left his whole holdings within it, he'd have had over 1.9 million off of just capital gains. Not even dividends, that's just capital gains. So that's those two ways that a lot of people talk. A lot of people talk about dividends and things like that, but the capital gains is always where people miss the mark and why people don't want to invest in companies like Amazon because they don't pay dividends. But if you see over the last couple of years, they're almost doubled or tripled. Shoot. It's based off of pure capital gains. And it's passive income on a dividend, but long-term income comes from the capital gains.
Got you. So Steven just asked a question talking about hedge funds investing in hospitals. I'm going to let you start because I have an opinion. I'll just say.
Go ahead. I want to hear your opinion and see if it's like mine. I'm not surprised.
Well, I would just say this. I think speculating or putting money into a sector that's supposed to be a healing sector is dangerous. I will say I am a venture capitalist. I'm an investor. That's how I make my living. That's how I eat, right? I invest in technologies surrounding healthcare, health, technology, all of those things.
Right.
But I will say this. I don't think the place of a hedge fund, or maybe even private equity funds, is to be in hospitals because their job is to maximize profit. And if you're maximizing profit, then that generally is at the expense of something. And what's going to
fall?
Exactly. So, they tell you all the time in business school, it's a funny joke to them. If you ever want to cut your operating expenses, just fire everybody. No salaries equals less operating expenses, right? But no, that's exactly when we think about hospitals that have crazy wait times. When we think about doctors working so many hours that they're completely stressed and unable to make good decisions. When we think about cutting services, when we think about the state of rural health care in this country, the disinvestment into the hospital infrastructure and these big guys who want to see maximized profits, that is at the expense of patients, most likely. And it's definitely at the expense of those hospitals that don't serve private payers. And I am not a fan. Now, I am a fan of investing into the healthcare segment. And I even think, fine, y'all build the buildings and we'll take it from there. I think hospitals work the best when they are not under the influence of money. Similar to prisons. If we have private investment, it changes the incentive, right? So you're incentivizing.
You're not getting anything out of it.
Exactly.
The same for me. Because now you're seeing a lot of these areas that used to be done or have jobs for people are now having jobs for robots, are now streamlining these jobs down to be done by one person doing the job of five. One company that I used to work for back in the day, they did the same thing. Slowly started, no, they're not in the hospital. They're more so in the automaker side. They started doing this slowly, letting go of people, but yet transferring over to either one person to do the job of five, or you seeing a robot do it. So I have a feeling that if hedge funds are interested in seeing that, they're looking for the money within it due to what's going on now with Ms. Rona Mae Jenkins. How can they maximize their money at a stronger ROI? And then what's going to be cut to make their ROI stronger? Like you said, people, patients, as well as policies, because that's going to change the policies that we're seeing now that we've grown used to. And now with what's going on with everything, this pandemic is being a reset. And if hedge funds are interested in doing so, it's going to hit the policy that hospitals see and have.
You have to incentivize the right behaviors in any system. So ultimately, if we see this kind of behavior, I will tell you in the United States, it's very interesting. Most of our doctors are specialty doctors, which is why we now have, and that's because they make a lot of money, right? Now, I'm not saying they should make a lot of money, but when we think about the general practitioner, the family doctor, there are fewer and fewer of those because malpractice insurance is, through the roof. OBGYNs are actually still not a very popular specialty because of malpractice insurance. A lot of hospitals, I didn't know this. I was in a rural hospital a couple of years ago. They didn't have an OBGYN in the hospital. Doesn't that sound crazy? They could not get one to service their hospital. And that's what happens when you have outside money influence. Now, hospitals are nonprofits,
right?
Which I think some people might be shocked at. So most hospitals don't pay property taxes. They take up a lot of land, but they don't pay no property. They actually make a lot of money.
They do.
But that being said, we have to incentivize right behavior. So I'm not gonna keep Nadia forever. You know, we only do a quick 30 here, but I will say,
you're fine.
Let's talk about. Yeah, see, you know, you can't say that to me because I can talk forever, and you know.
Oh, I can. That's fine.
Let's talk about just starting out. Let's say, yeah, I had a job and I never invested in my 401k. I have a little bit of money now, and I'm thinking about using one of these trading platforms that don't have any fees. Where do you start your journey in investing in stock?
You can, interestingly enough, do it through a Roth. Granted, you're used to doing it on these apps and things like that with no fees. But if you're more so playing for the long term, more so interested in index funds, you stop. Index funds and ETFs are pretty much, if you get the assorted bag of chips from the grocery store, it's one price you pay for that fund. It's multiple companies within it. So if you're used to doing that, a Roth is good because you'll pay whatever the fee is, but you don't have to worry about glitches and things of that nature. Things happen on any form. But if I were you, I would be very cognizant on what those third-party apps, which are like the Robin Hoods, the Public, all of those good things. I say public because they pay me. But you have to be very leery on what their fees are, what their commission fees are, if there are any fees within it. And another thing that I noticed, without trying to call them out, check the price of the stock that you're interested in on that company's on the brokerage app, but also go Google it to see. It's been a couple of times that I've seen a said app that is under fire right now have two prices.
Oh, wow. See, that's an insider tip. I got 3 screens in front of me right now. So if you are about to invest on a platform, double check the price. Do that price matching that you do in the store when you want to make sure that you're getting the best price. That is a really good tip. I never thought of that.
Because a lot of people are like, how is it free? How is it free? It has to be a fee somewhere. And a lot of times it is hidden. I used to work very closely with Merrill Edge, as well as working with Snoopy, and knowing how they also on another side with annuities, but that's always something that stuck with me, is to see where the fees are. Where are those fees coming from? And that's probably more than likely where they're coming from.
Because they tuck them in somewhere, and we, missed the pricing in there. Just because, it's to us, at least coming in, we didn't have to pay anything, so we joined on. But you said Roth, and for people who don't know, y'all know I'm big on explaining. What's a Roth, and how do you get into a Roth?
You can sign up for a Roth just by Googling it. The most popular one is Fidelity, E-Trade. All of them have that. So say, for instance, if you work for a company, you don't work there no more, you have a 401k, sorry, you can transfer that old 401k into a Roth. A Roth has pretty much, you're not going to get hit with taxes. And it's pretty much tax deferred in a sense. So that's why I will always refer to a Roth IRA over a traditional IRA. You had to get those taxes and fees out the way, so you don't have to worry about it.
Now, what if you're an entrepreneur? Is a Roth still an option for you?
I have one. So what does that say?
The answer is yes.
Yes. And then even now they have something called a solo 401k too, for those entrepreneurs who still want to try to fund their retirement or exit strategy. You can go ahead and sign up for a solo 401k.
Yeah. So Stephen, I see the relationship lady, she's giving us hearts, and she's like, they really do chuck in those fees. But Stephen just said he saw an app mention or article mention that free apps are selling or were selling consumer behavior.
Consumer behavior and data. One of my favorite people, Angela Bitton, who's over Streamlytics, as well as Capital, I think the name of it, but they made a post about that today, about how we're seeing Roku and all these companies selling our data. They're selling your data as well. So it's a price that you're paying, even if it's free or you have to pay something. Are you giving away your data? But at what price? What are they utilizing that data for? And I'm sure the data over this past week has been off the chain for everybody. I'm sure.
Yeah, because they're looking at the people who are trying to jump in and couldn't. They're looking at the people who did jump in. everybody's about to see. I can say this. I did an on-air interview yesterday. Do you know how many advertisements I got for something other than Robin Hood? I got Schwab. I got a bunch of advertisements thrown at me, and I was like, because they saw my reading behavior.
That predictive behavior. And on the other side of my company, I do marketing, but I used to run those kind of data pools and everything like that when I was working for a corporation. So to notice that it has grown over time for those ads popping up, those retargeted ads, I'm sure everybody's over Robin Hood right now, even if you do not invest in Robin Hood. Just because you probably on Facebook commented, liked or something, it's still going to populate you over.
Yeah. Well, I will also say, so I always try to give a tip for those who have kids and they want to start passing some of this knowledge on. So are you in favor of brokerage accounts for your children to help them get on and trade and do that kind of a thing?
I am big on the custodial accounts for kids. StockPal has one, Stash has one that are pretty good for kids, and they actually walk them through like the educational part of it. So I'm big for that.
Yeah. So
you're starting them early. Like if they like books, Scholastic. If they want a PS5, Sony. I mean, just make it make sense for them.
Exactly. So I am I'm in the same boat. So custodial accounts are what those are called. The parent sets them up, but you can get your kids involved, and the more you show them, this is, and I will say this, and this is a fun story for all business people. Instead of buying one of these, if we had bought the equivalency in stock, whenever, literally whenever, if your first, I remember I had an iPod, I had the little shuffle. If you had literally just taken that money, no matter what the price was, and put it into the stock instead of buying the products,
right?
What would that have looked like? Now the funny thing is, now if we all do that, then the stock ain't gonna go nowhere because it has something wrong. But that being said, getting your kids used to saying, I tell people, they're like, I don't know anything about stock and I don't know what to invest in, or I don't know what companies to invest in. I say, look around you, right? Look at what you're using already. If you, I'm anti-ash. So I always have a few just products that I use all the time just on my desk, right? But start looking at the things that you're interested in. That could be beauty and cosmetics. That could be water. That could be
consume what you consume.
Exactly. And so you can absolutely. My sister's laughing because I said I'm anti-ash.
I am too.
We are shiny when we have to be, especially I don't need nobody commenting on, she couldn't use no lotion today. But making sure we're passing down these smart behaviors. So I will say this just to give us a few closing things. One, we learned what the difference is between trading and investing. And I will say this is not anti-trading, just know the difference, right? And if you're going to be a trader, not traitor, a trader, then make sure that you're able to absorb those risks, absorb the costs, right? Now, I am one that does say, if you want to make a lot of wealth, you're going to have to take some financial risks.
Big ones.
You need to be able to drop, I see somebody said, you're dropping gems, Nadia. She said, imperfect perfectionist.
That's my cousin.
That's your cousin? See, we got family all into the feed today. But if you're going to take these big risks, make sure they make sense and they're calculated. Make sure that you know when you've had enough. One of the problems with gambling is, I know I play poker. I know a lot of people who do. You gotta know when to fold them. You gotta know when.
That is exactly what I said on public today. Know when to hold them, know when to fold them, or you don't know when. If you don't know when, you don't need to be playing. And how did I say it? You referenced it. If you do not know how to play in traffic, do not drive that car.
Exactly. I said that. I was like, I love that, because ultimately somebody was like, that don't make no sense. I said, please. Now you can play in traffic. You might, if you go down to Independence right now, you might cross the street, or you might get hit by a car. You don't know which one. You're taking a risk, right? And how important is the thing on the other side? So make sure that you're taking a risk that makes sense. And, for some people, and this is where you cannot compare yourself to other people who can take a different kind of risk, right? So some people can absolutely, for example, I don't have any children, right? If I'm reckless with my spending money, nobody else is going to starve, right?
I'm still going to eat ramen noodles. I'm still going to eat.
Exactly. You still eating, right? But don't compare where you are financially, where you are on the risk tolerance level, where you are in the stock market. You cannot compare them to other people because you don't know what they have to lose. You don't know what they're willing to risk. You have no idea what kind of liquidity they might have. You have no idea, you know, they could be playing with $40,000 in whatever app, and you know, if they lose it all, they got another $40,000 to replace it. That could be everything you own. So make sure the risks are calculated. Yes, big risk, big reward, but there also could be big loss. So we have to be smart. No investment is without risk. There is no such thing as a sure thing. And I always tell you, if somebody says, this is a sure thing, Nadia, I got a sure thing for you. You know what you say? Okay.
Child, please.
Okay. Unless it's death.
That's what I say.
And unless that sure thing is death, there are risks, right? So ultimately, be smart, guys. Be smart out there. Don't let, you know, what you see on TV, the social media hype or whatever, fuel you. I will also say, and this is not financial advice. We've given you no financial advice on to buy or to sell. Is the party over? Is the party over for all of these stocks that have been buzzing in the news? I don't know.
I don't know. We don't have a crystal ball because not even hedge fund people saw this coming, really. But I honestly think due to how things do this, we probably got another couple of days. I hope so, because this has been fun to watch.
It gives us so much chatter, so many things to
and it's actually for those who talk about money or are interested in money, it's a good cliff notes. It's good case study for you to watch, because I'm happy to, like I said, see so many people in it, but it's showing you that investing is more than money. It's your mindset. It's how you actually are going to maintain what you've learned through this to actually strengthen you as an investor. And I wish people would stop. Oh, this snatching stop. I love to say that. I say that. But it's more into that. It's a strategy. It's a mindset. And it's actually your feelings. You got to watch your portfolio 3 stacks. Because if you lose a lot, I've seen people pull their money out. I can't do this. But then, I wish I would have held it. So it's about training yourself. So you have to have case study right now.
Something you want to execute. What is your goal? What's your? I heard you say safe word. When is it enough? When is enough? Well, pineapples. You know, when you about to scream pineapples, it's enough. Either I made enough or I lost enough, and hold yourself to it. So, true. You know, that's the trick with any investments. For example, when I say that I am out of here in 3 years in an investment, I want my money on, you know, the 3rd year and 2 minutes. Like, I'm done. That's the end of this, and I'm back out. So make sure that it makes sense for you. We'll talk next week a bit about setting your own investment strategy. What goes into that? What, you know, figuring out what your risk tolerance is. Like that, those are things that will help you determine exactly which part of the game you playing in. And if you don't know that, then you'll get easily swayed by other people, other people's emotions, some stuff you read in an article on Instagram, or somebody said something in Clubhouse. You don't want to be...
Oh, Clubhouse.
You don't want to be the silly person just taking any old advice because you don't know any better. So...
Absolutely.
I have to end on this note because, you know, I'm all about supporting other people and other people's businesses. 1, tell us what you do, where you make your coins, not in the nit-grit, but tell us how we can support you in your business, and tell us how to find you and how to connect with you.
Well, I am the founder of the Brands and Band Strategy Group, where I help people with their strategy for marketing. I've been a marketeer for half of my life, it seems like. So as far as brand strategy and all that good stuff, I'm really niching down right now due to the fact that what's going on in the pandemic, and Black businesses are going under due to not knowing how to pivot themselves. So I'm working with a lot of brands on making their brand development to get their revenue as well as being relevant. On the other side of the bands, I help people understand what their money is doing, ways for them to put their money to work for them now and later. I had a class in December, bringing it back in February, the snatching stocks webinar, which tells people how to invest. Maybe I should have had it this week. But that's a big one, as well as taking clients on both the marketing as well as the money side. So yeah.
So Nadia doesn't know this, but she's gonna see me pop up on her client roster because still developing the brand and where I am and where I sit. So, and anybody who's been following me knows that there's been some pivots and some unexpected turns.
I'm like, okay, I see it. I'm
doing the she said, you don't know how to pimp yourself, child. I'm about to be on the stroll for real. I am really figuring out how to maximize and capitalize. Zamaria Spa. So I will give a shout out to Zamaria. That's going to be my business shout out for today. If you need a good massage, Black owned spa, Anita Scott is the best. I will tell you guys, I entered into her spa not knowing what to expect and into what she calls, I think it was the African Dreams. Now, this was a relatively, look, I'm gonna be candid. Don't kill me, Anita. I chose this because it was like it was like a couple of hours, right? Because I felt like I needed a whole lot of relaxation. So I walk in, and this is a whole experience that helps you kind of release, mental blocks, helps you hear from, we'll call it the universe, we'll call it God, whatever you call it, but the atmosphere was so conducive to me being able to move forward. I loved it. I told her I would do it every week. She said, you don't need to do it that much. But I do patronize her. And it's the journey. Yes.
The journey. Okay. I like how that sounds.
But now I go on a regular basis for a 90-minute massage. It is my favorite thing in the world to do. Connecting is easy. COVID-19 protocols are to the max. It's always clean. I'm always feeling safe. I love her to death. I can't wait to see her next location or her next 50 locations, because I would love to see her be a franchise. So if I'm in Paris, I can go ahead and
get it to be one.
See, but if we want to support a Black-owned business, I know we're coming into Black History Month, make sure that we are thinking broadly about those kinds of businesses, whether it's on the marketing and branding side of things with Nadia, whether it's on the spa and relaxation side, let's think broadly about who we support, literally every single thing that you have going on or that you patronize. Can you swap it with a local business? Can you swap it with a Black-owned business? I challenge anybody. It's hard, and it may not be as hard as we think. It just requires a lot of intentionality. So, thank you so much I pulled her in. I literally said, I need your voice. I need your thoughts. And thank you.
And thank you, because interestingly enough, I set the intention last year to start going live more on Instagram. I do it on Facebook like nothing, but I took the leap, so I'll be doing it more over here, so yes.
Well, you're always welcome to drop in and just say 3 things and drop back out with me if you want. So I will see you guys next week, 2 p.m. I will be in this chair talking about wealth and whatever else is on my mind for that week. So we will see you guys next week. Stay safe out here in these Corona streets. And if you don't have to be out, stay inside. Bye.
Thank you for having me.
Thank you.
Bye.
Bye.